This is going to be a tough one, but these are some of these phone calls that I wish I didn't have to do. But this is a building. The rents are just grossly under market value, and the seller is confused as to why the property is not trading and selling. All it is going to be is me explaining to the seller income versus expenses. She had it listed for 115 because that's what I have an appraisal for. Didn't sell. 950 didn't sell. It's because the building is losing money for anybody that borrows money to buy it. It's going to be in like the 800 range. Hoboken is trading at a 6% cap, so Union City would need to be higher. It's got to be higher than that. Hoboken is way more desirable than Union City, and that's what you would get debt at, guys. So for anybody buying this building, overwhelmingly they're going to have debt service, what we call taking out a mortgage. Rates right now are at least 6%, at least, maybe even a little bit more because of the loan amount. You have to at least be getting that back in the building itself as far as generating income. If you're not getting at least a 6% return on your money, the building is going to lose you money. At $750,000 is where this building would generate money.
Hi, Daniel.
Did I get you at a good time?
Yeah, this is good.
Perfect. So I took some time from our last conversation, dug into some numbers, actually spoke to an appraiser and also a couple investors that I have on my dial, that when we get properties that when we go on the open market, they would bid it first and I'd see if the seller would be interested in. Has anybody explained to you and given you like the formula on how investors purchase property like this?
Yeah, the 6% that most investors are looking for.
Well, Hoboken's at 6 right now. Hoboken's trading at 6. Union City's is trading right now a little higher than that. It is a more desirable town than Union City. The city is less involved with buildings than Union City. Union City is very involved when buildings change hands. I want to go over with you rents versus expenses. Your total rents for this, not including the rear studio, because we really can't include it. It's not a legal studio. We know that whoever's going to buy it's going to use it, but for qualification purposes, I'm only going to use the 4 units. That brings in over $6,600 a month, which in essence is about $78,400 over the year. Your expenses. The appraiser used 2024's taxes, which is like $18,007 and change. I bumped it up a little bit because I'm imagining your taxes didn't stay the same from 24 to 25. I'm using a number of like 19.5 for that. So your taxes at 19.5, your insurance at 4,500 yearly, your water at 1,200 yearly, your sewer at 1,600 yearly, and your PSE&G at 6,000 yearly. Usually management is about 10 to 12%. I'm not even going to use that right now because I want to give you a reference of what these investors are looking for. Now you're at 32,800. Then what you do is you subtract the 32,800 from the 78,432. That's going to give you 45,632. To value the building, you are going to divide that 45,632 divided by whatever you're thinking your list price is going to be. At 900,000, that's a 5% cap. Just to get a regular traditional mortgage, your rate is 5.9. So we're at almost 6%. If you were to borrow on this building, you would be losing 1% every year. Whatever investor buys this, the building would lose them money. This is why when you had it listed at 950 and 115, nobody bid at it. And when I pitched this to my investors, they're like, I don't understand why the rents are so low. And I said, well, the owner lived there and he was a good owner. I just want you to understand that this is why, unfortunately, we didn't have any offers at the numbers that you had. Because the building itself at a 5% cap is $900,000. And that's, again, not including if you were to put a management fee in there, which they're always going to have somebody do it for them. This is why the numbers that you guys had it at just weren't working. I want to be realistic with you about what investors will pay. My partner said to me, I wouldn't buy this building for over $750,000.
Wow.
Unfortunately, it's losing you money every month.
What do you think? I mean, 38,949, you put it in the market. Like, what do you think? What do you think?
It is impossible to underprice a property because if the buyers and agents see value at the number you're putting it at, you will have more than one offer because there's value there. More than one person's going to see it. They're going to want it. But it is 100% possible to overprice it. And unfortunately, you experienced that twice.
I want to see some movement, right?
Sure.
Are you people looking at it? You know, spring is coming.
Mm-hmm.
949 again. I think that's, I don't know. Yeah.
At 900,000, you're at a 5% cap, and that's still a loss. If we take your net operating income and divide it by, I don't know, shoot, let me go 800. You're at a 5.6 cap. So all you're doing is dividing your net operating income by whatever price you're thinking you'd list it at. And then you're going to get a number. It's a very easy formula. At 800, you're at a 5.6. You're not even at 6% at 800. It's so under rented. And to get them out is a problem.
Just let you know that my sister actually did put the house on the market, and she is doing so much better than me. Like she already has she had viewings the same weekend, and she already has offers.
Yeah, I could have sold hers too. I probably would have priced her probably very similar to where her agent did.
Can we call my brother
Sure.
on the other line?
Yep, I'll break it down for you. Are you familiar at all, and it's okay if you're not, with how investors, the numbers that they run as far as rents and expenses? And Hoboken right now, it's more desirable than like Jersey City or Union City or North Bergen.
Yeah, I get that, but
Yeah.
that's if the investor is not doing anything to the house, right? Normally, investors redo the apartment and raise the rent. The potential of the increase of the rent, adding money into the building. Yeah, you're saying that it's gonna get that amount, but an investor would never keep it at that.
No, but you can't get the tenants out. That's the problem. You can't throw them out.
Definitely.
No. Well, my friend, if you know the way, then I would say you can give it to us, because I've been doing real estate in this town for over 20 years, and right now we don't know the way. That's the issue. You're not wrong with what you're saying. There is room for improvement. Right now you can't get those tenants out. That's why they're paying what they're paying, and they will fight tooth and nail. And if you guys could get some of them out, one or two of them, whole different ballgame.
Okay.
It'll increase the value of your building. Let's put it that way. If you can get a registered rent of 25 there, yes, your building is going to be worth more, no doubt. An investor can buy it, but they can't get them out. But again, if the building is priced at market, what we call at market value, with what it's worth on the market as it stands, you'd have offers the first week or two that you had on the market. It's virtually impossible to underprice a property. But let's say we price this building at 700 and the market thinks it's worth 8. You are going to have more than one offer that's going to push that value above. And then what happens is we leverage them against each other. And then what we do what's called highest and best. And they don't know how many offers we have. They don't know what those offers are. And then I share with them, you guys put that offer together where if it trades $1 above whatever you give me, you can walk away and say, I wouldn't buy for that. But if you give me, let's say 680, and in 2 months when this thing sells and it sells for 695 or 700, I look at you and say, would you have paid that? And you tell me yes, you didn't give me your highest and best number. So we get that highest number they're willing to pay.
Okay, cool. Thanks for the information. I guess I'll talk.
If you want to have any discussion, whatever the case is, I'm here for you, okay? My pleasure. Have a good day.
There's no case in which my values will go down.
If you don't know what to do, then don't do anything. In your mind, you have 550. The market has already said that's not the number. You're definitely not ready to let the property go.